Real story is who's still in the game. But XRP is moving the opposite direction, Ryan. Contracts up 5% while it trades higher. That's fresh money coming in, not a squeeze at all. So we're seeing a split in the crypto complex right now. Fair point. Dogecoin's also down nearly 5% on open interest, despite price holding. So you've got three major names: Bitcoin, Ethereum, Doge, all telling us the same thing. Traders are taking chips off the table, even as the market stays bid. What does that tell you about conviction, though? If prices were resting on real strength, wouldn't we see open interest building, not contracting across the board? You're asking the right question. It suggests we're in a holding pattern. Prices aren't falling yet, but the underlying leverage is draining fast. That's the setup that matters for what comes next. Ethereum is long intraday at 1884.9, stop at 1882.6, first target 1890.1 for a 1 to 2.3 risk reward. The trend is up with the averages stacked, and price is holding above the 200-day. RSI at 60 leaves room to run. Below 1882.6, the setup fails. Silver is short intraday at 64.689, stop at 64.853, first target 64.31 for the same 1 to 2.3 ratio. The trend is mildly down, with price capped by the 21-period average. Above 64.853 it's broken. Ethereum also long as a swing trade at 1903, stop at 1878.2. First target 1960.3 for a 1 to 2.3 on 1.3% risk. Averages are aligning, price holding above the 200-day at 1890.6. Below 1878, this one is wrong. This is a breaking market alert. Nearly $800,000 moved in Bitcoin at 68,707, just under a minute and a half ago, a 99 times the typical print size. The buyer absorbed it. Stocks are rallying this morning as bonds strengthen, and the administration pauses tariffs on Canadian goods. That relief on trade policy is what's moving equities higher across the board right now. The bond move is significant, Natalie. Treasury yields are actually falling, which typically happens when investors expect either slower growth or rate cuts ahead. Are we reading this as the Fed potentially easing sooner than expected? That's the question, Ryan. But here's what matters for your portfolio. When bonds rally and equities rally together like this, it usually signals investors are rotating into a safer risk environment. The tariff pause buys Washington time to negotiate. True, but crypto's telling a different story. That Trove token collapsed 90% during its token generation event. Does that volatility concern you as a broader market signal? Isolated implosions in crypto don't move the needle for most investors right now. The real story is equities and bonds agreeing on direction, and that agreement is bullish. Gold's up nearly 4% this morning. Silver's up almost 5%. That's the metals telling you the dollar's losing ground. And when the dollar weakens, commodities become cheaper for the rest of the world to buy. Copper's only up 0.5%, though, which suggests the market's not convinced we're in an inflation trade yet. But Ryan, crude's moving too. West Texas is up just over 1%, Brent slightly less. Are we seeing actual demand pressure, or just a weaker dollar doing the heavy lifting on all of this? It's the dollar, Ryan. The euro's up nearly 1% against us. That's the real story. If this were about supply fears or growth expectations, copper would be leading the way up. Instead, it's the safe haven metals pulling hardest. Fair point, but doesn't a weaker dollar usually mean the Fed's rate picture is softening? That's what actually matters for where commodities head next quarter. Exactly. And that's why you watch this. Commodities aren't a supply story anymore. They are a rate story. The metals are already pricing in looser policy ahead. This is a breaking market alert. A nearly $600,000 Bitcoin buy just went through at 68,724. That's 99 times the typical trade size. The print absorbed in just under 3 seconds. The Nasdaq is leading the rally this morning, up about 1/3%, while the S&P 500 is up 0.5%. The Dow's climbing 205 points. It's a broad move higher across the board. Natalie, those equity gains are modest compared to what we're seeing in metals. Gold's jumped nearly 4% and silver almost 5%. Are we reading this as a flight to safety, or is something else driving the metals higher? That's a fair question, Ryan. The metal's strength does suggest some underlying caution even as stocks climb. But we're also seeing the euro up against the dollar this morning, which typically pressures gold. So it's mixed signals. The currency move is interesting though. The yen's actually weakening, down 0.75%. Does that complicate the story for multinational earnings? It does. A weaker yen helps exporters, which could explain some of the equity enthusiasm. But you're right to flag it. Investors are watching multiple crosscurrents at once this morning, and that's keeping any single move from running away. Ethereum's the real story in crypto right now, up nearly 10% overnight. That's the strongest move we're seeing across the board this morning, and it's pulling the entire sector higher. Natalie, but Bitcoin's still the volume driver, 7.7 billion in turnover in the last day alone. Shouldn't we be watching whether that momentum holds above 69,000? You're right that Bitcoin's the heavyweight, Ryan. But retail money is clearly rotating into Ethereum. The question for viewers is whether that signals confidence in the broader ecosystem or just profit-taking after Bitcoin's run. Fair point, though Solana and XRP are both up nearly 7% as well. Are we seeing genuine strength across altcoins, or is this just momentum chasing? It's real breadth. 9 of our 10 tracked assets are in green territory. That tells you this isn't a single name story. It's money flowing back into crypto as a category. We're running a 60% hit rate on crypto calls over 20 graded positions, but the tape's telling two different stories right now. Ethereum's winning on the headlines up nearly 10%, yet our live call on it is short, betting it falls from 2086 down to 2012. That's the contradiction. Order flow is 86% sell side, Ryan, which is supposed to be the signal that matters most. But that falling open interest you're seeing, doesn't that actually undercut the bearish setup? If open interest is dropping while sell side dominates, we're watching positions close, not fresh shorts building. That's more a relief trade than conviction. And we've got 65% of accounts still long Ethereum. Where's the panic? Fair point on the positioning, Ryan. The panic hasn't arrived yet. But with two calls still live and only 27 minutes left on Ethereum, we're about to know if order flow beats positioning or positioning wins. Solana's already nailed 2 consecutive calls to the upside. That's what a real trend looks like right now. 2 wins in a row is confidence building, but they were small moves under 2%. Thanks everyone. This is Midday Market Brief. Natalie Anderson with you, alongside Ryan Smith, and we are looking at Fed Bitcoin's open interest just climbed 3% to 60,000 contracts, while the price kept rising. That's new money flowing in, not a squeeze. Ethereum's different open interest fell 3.5% even as traders stayed active, which suggests position holders are taking profits. But Ryan, Solana's actually showing what you'd call healthy momentum. Open interest up nearly 4% on rising prices. Does that change how you're reading the broader market? It does, because Solana tells us retail conviction is still there. Doge, though, lost 4% of open interest on a falling contract base. That's genuine liquidation pressure. XRP gained 2.5% in open interest, while prices moved higher. Smaller move than Bitcoin, but consistent direction across different asset classes. Does that suggest this rally has legs? When you see Bitcoin, Solana, and XRP all adding contracts on the upside, yes, the squeeze narrative doesn't hold. This is participation, not panic unwinding. This is a breaking market alert. A single Bitcoin trade just hit $163,000 at $68,722 per coin. That's nearly 40 times the average print size. The seller absorbed it completely without moving the market. The dollar's quietly pulling in the opposite direction from risk this morning. The euro's up almost 1%, and the yen's weakening, which means the greenback's losing ground. That typically opens the door for equities and commodities, and we're seeing it. Gold up nearly 4%, silver up another 4.5%. The S&P 500 is up, but only just. Natalie, but aren't we seeing the yen weakness as a Bank of Japan signal, rather than pure dollar strength? The yen's down 70 basis points. That's usually a catalyst for carry trades, which would push money into riskier assets. So shouldn't we expect more upside in crypto and emerging markets than what the modest equity gains are telling us? You're right that the yen move matters, Ryan, but the carry trade only works if capital actually flows there. What I'm watching is whether the 10-year yield holds or cracks. Once we see real pressure on rates, that's when you'll see the broader risk rotation stick. Bitcoin is trading at 68,776, and the 21-day moving average sits at 66,650. That's a gap of over $2,000 between price and the intermediate trend, which tells you how sharp this move has been. The 200-day average is at 64,600, so we're well above the longer-term support. RSI is at 90.6, deeply overbought, but the trend strength index shows a trend strength of nearly 70, which means this momentum still has structure behind it. The resistance level everyone's watching is 69,730, Ryan. But I want to know, given that the MACD histogram just turned negative, are you seeing this as a pause or a reversal signal? Because the higher lows and higher highs structure is still intact. The histogram turned negative, yes, but it's not a cross down yet. That's the difference between fatigue and a real reversal. Support sits at 65,179, and that's where I'd want to see price hold if it does pull back. Until we break below 65,000, the structure holds. Fair point. Ethereum's RSI is even hotter at 93.8. Price at 2100, but look at silver. Down structure, lower highs and lower lows, and the MACD already crossed down. Why isn't that getting the same respect? Because silver's trend strength is only a 3, not a 5 like Bitcoin and Ethereum. Weaker trend, weaker reversal signal. That's the distinction. This is a breaking market alert. A single Bitcoin print just crossed $1.15 million at 68,588. That's 99 times the typical trade size. It hit the market 2 minutes ago and absorbed completely into the bid.